Hey, what's up, guys? Welcome to Houston Business Podcast. My name is James J, and we are doing a weekly Q&A session where I take questions that I've been asked. Most of them are going to be related to real estate or mortgage, but I figured I'd just answer the questions because if one or two people have a question, usually other people may have that question as well. So I'm going to start doing a weekly Q&A on Wednesdays where I answer questions. So I've got questions already that I've been asked. I'm going to answer those. If you have questions for me, you shoot me a DM here on Facebook. You can also check me out on Instagram. You can shoot me a DM there with your question, and then I will answer that question on the next week if I can get it in. I won't go too long with the show, but we're going to start off this week with some really good questions that I've received, and I want to answer those questions. So the first question that I received was, how does the forbearance really work, and am I going to be required to pay that forbearance back when that time is up? Now, this is a great question because there's been a lot of miscommunication about how the forbearance is going to work. Initially, people were told that you're going to have 90 days or whatever your servicer or lender agreed to. Most people, it's at least 90 days. Some people, it may be longer, but just use 90 days as an example. You get a 90-day forbearance, which means for 90 days, you're not going to have a payment. On month 4, what's been circulating around is that on month 4, you are going to be required to pay all 3 months and that month 4 all at once, which is it's financial, just suicide. I mean, it's ridiculous to put yourself in that situation if you can make the payments already. All right, the payments are not going away, especially on a forbearance. So what's come out in the last week or two is the government, specifically Fannie Mae and Freddie Mac loans, they're saying that after that forbearance is over, you have some options. So it could be that you pay all your payments at that point. You could work on maybe a deferment, which means they would take those payments and basically add it on to the end of the loan, or you could do a modification. So you want to reach out to your lender specifically. Nobody is going to give you the exact same answer. Servicers and lenders are different. There's been a lot of miscommunication about how this forbearance is going to work when it ends, but you want to reach out to your servicer or your lender and find out if you haven't already. If you've already started the forbearance process, call them back. So I want to know what are my options once we get to the end of this. Now, most of the lenders and servicers are supposed to reach out to you 30 days before your forbearance is going to come to an end. Don't leave it up to them, guys. All right. Do not leave it up to your lender to reach out to you. Like, let's be real about this. All right. You be proactive and you reach out to your lender or servicer. I would do it now. Don't even wait until you get 30 days out. I would do it now. Find out what's going to happen once that forbearance is over. Do not wait too long to find this information out. You do not want to put yourself in a situation where you have to make those payments all at once. It's not going to be a great situation. So great question. I've got that question quite a bit, so I wanted to make sure we address that. The other question that I've recently received was in reference to FHA loan limits. All right. I'm going to actually use FHA and conventional because I want to be clear when it comes to loan limits. People sometimes confuse the loan limit with the sale price. All right. For us in Houston area anyway, I'm not going to speak to everywhere else because different counties may have different limits. All right. It's not the same all the way around. But for us, conventional is a 510. All right. It's 510 and some change. Exactly. So if you're purchasing a house at $600,000, I'm talking about conventional right now, you put down enough money to get it under the loan amount is what matters to get it to conventional. The difference between conventional and jumbo, big difference, especially now in the environment that we're in. So if you're getting a $700,000 house, and you put down $100,000, well, that's a jumbo loan because it's still over the 510 cap for conventional. All right. So very, very important distinction, the sale price versus loan amount. There is a difference. So you want to make sure that if you're trying to get conventional, that you do whatever you can to get that loan amount under 510. If that means putting down more money, or if that means looking at a different home to where you can get that balance down under 510 or get the loan amount down under 510, then you can go conventional. But there is a big difference in jumbo and conventional interest rates as well. So you want to keep that in mind as well if you're trying to keep conventional. The requirements for jumbo are also going to be a little more challenging than conventional as well. So you want to keep that in mind if that's something that you're looking at doing. Now, on the FHA side of things, the same thing. It's going to apply as far as county goes. So for most of Houston, we're going to be around 384 is going to be our 331. I apologize. 331. So again, this is loan amount. So an FHA could change this at any point. They reserve the right to change this stuff. Usually it'll stay the same for a year. But you want to keep that in mind. Again, it's loan amount. Now on an FHA loan, the minimum is 3.5%. That's the minimum amount. However, if you wanted to put down 10% or 20%, it really doesn't benefit you that much when it comes to FHA. Meaning, you're not going to remove the mortgage insurance, right? That is the key. The mortgage insurance won't go away on an FHA loan. Now, if depending on your credit situation, if you have 20% to put down, I wouldn't even take you FHA. I'm going to take you conventional if we can. Because if you don't have to pay the mortgage insurance, you're going to save yourself quite a bit of money. So every situation is completely unique to you, and you want to know. We'd have to know exactly what your situation is to see which way is the best way to go. But FHA loan limit for Fort Bend, anyway, Harris around 331, and conventional is 510. These are loan amounts, not sale price. The last question that I'm going to answer just for tonight was in reference to credit scoring. All right. So the new credit scoring requirements, this was the question that came up. So the environment has definitely changed. I would say for most lenders, not everyone, everybody's different, guys. Everybody's got different overlays, which we call an overlay. So that means each lender will have their own set of criteria on top of what FHA requires, VA requires, conventional. All right. So lenders reserve that right to have some additional requirements if you want to get a loan from that lender. That's why from lender to lender, everybody's not going to be the same. So, but what I would tell you is you want to try and keep your credit scores if you're looking at an FHA loan, I'd say 640 is ideal right now. Does that mean you can't find a lender under 640? No, that's not what I'm saying. If you're at a 580, good luck. All right. It's just not probably going to happen right now in this environment. Will that loosen up at some point in the future? Probably. When that's going to happen, who knows? So literally a month and a half ago, I could do a loan at a 580, 590. Now, no way. Can't do it. Jumbo loans are pretty much made. Again, I mentioned that earlier that they're a little bit more difficult to get as well. And conventional loans, same thing. Criteria is tightened up just a little more. So everything's tightened up a little bit. I would aim for a 640 if you're trying to get FHA. Again, it's not a just flat out if black and white. If you're not at 640, you can't get a loan. All right, that's not how it works. But everything else needs to be in order as well. So you can't have a 640, have late payments, have some collection accounts. All that stuff starts stacking in the wrong direction. All right. We don't want to stack it negatively because that's what underwriters are looking for. All right. They're going to look at all the elements of the file You don't want to have a bunch of other negative things and have a credit score under 640 trying to get an FHA loan right now. It's very difficult to do. So the higher the better, obviously, as far as getting your credit score, the higher the better. But as far as a mortgage now, I would say I would look for a 640, try to work your way up to 640. And if you've got questions about that, you need any help, any direction, I will be more than happy to help you with that. There's actually, I'm going to put this up, guys. If you go over to betterbuiltcredit.com, there's a free guide there you can get. It'll give you some tips on things that you can do to improve your credit scores. This is going to affect more than just you owning a home, by the way, guys. A lot of people that are going to be applying for new jobs, you know what the employer is going to do? They're going to check your credit. So this resource is there. It's not just if you're looking to buy a home. It is for multiple things. All right. House, car, job. In a lot of cases nowadays, they're checking credit. So you can head over to betterbuiltcredit.com. There's a free resource there. And I'll see you guys next week on the Q&A with James J. Keep watching. Make sure you guys subscribe to the podcast as well as check us out on YouTube as well. Send me your questions. Shoot me a DM either on Facebook or on Instagram, and I will get your questions answered. All right, guys. Have a good night. Take care. Talk to you soon.